4 Henan rural banks froze 40 billion RMB, $6 billion, of retail deposits in April 2022. Chinese homeowners threatened to halt mortgage payments on development project apartments within 3 months. Though unrelated, many people associate the two events. The mortgage boycott began so soon after the rural banking crisis, which fears about frozen savings may have spurred, and both incidents were disproportionately focused on Henan. This huge, agriculturally important, landlocked province in central China's Yellow River Valley has just under 100 million people and a GDP of about $1 trillion. These events have been misinterpreted and may change in the coming days and weeks. Both events are symptoms of a deeper weakness in the Chinese financial system. They can help illustrate the systemic pressures the country's financial system has struggled to adjust to after years of rising debt, nonproductive investment, and property prices. This insight has two major ramifications. First, Chinese regulators concede that the financial system has moved toward dangerous, self-reinforcing borrowing patterns. Economists like Hyman Minsky, Irving Fisher, and Charles Kindleberger have realized that years of monetary expansion, rapid growth, and rising asset prices lead to these vulnerabilities. Second, several analysts have provided solutions for China's rural banks, unfinished apartment building owners, and the real estate market. Most resolutions fail. These suggestions emphasize restructuring and extending implicit and explicit liabilities. Local governments are large, solvent banks repay most extensions. Solvency and liquidity problems are comparable. However, for years, nonproductive infrastructure, property investment, and systematic real estate overvaluation have underpinned China's secured debt expansion. Debt hasn't increased the economy's debt servicing capacity. Since that's the case, only implicit or explicit transfers to lenders from one or more economic sectors can service the debt. In a February 2022 blog article, I stated that these transfers could be taxes, defaults, financial repression, inflation, wage suppression, or currency appreciation. The essential difference is cost allocation. Someone must pay: households, enterprises, local governments, Beijing, the agriculture sector, or trade products. Political decisions have major economic effects. Henan Bank operates. In April 2022, 4 rural banks, Yuzhou Zinminsheng Village Bank, Zhejiang Wanghuai Community Bank, Shanghai Huamen County Bank, and New Oriental Country Bank of Kaifeng, froze 40 billion renminbi, $6 billion, in retail deposits, starting the Henan banking crisis. 1,650 rural banks have 12% of China's banking assets. These banks emphasize local agriculture. Due to their geographical and sectoral concentration of banking activity and local government pressure, rural banks in China are riskier. Due to this geographical specialization, rural banks have increasingly used online deposit schemes to diversify their funding. Due to low income and the internet's ease of comparison shopping, small regional banks, especially rural lenders, struggle to increase deposits from local clients. Even though it's prohibited, small banks have teamed with online financial services platforms and brokers to offer savings account bonuses. Online deposit programs were banned in early 2021 because they were hard to manage and abuse. 2022 saw their use. Du Xiaomen Financial, an online platform, may offer bank-affiliated products with 4% interest rates and 1-year maturities that can be rolled over for 5 years. High interest rates and reasonable possibilities attracted funding from throughout the province and neighboring provinces to the 4 rural banks. Thus, the bank's deposit freeze affected more than rural communities. Online system upgrades caused the bank's April deposit freezing. But as the freeze dragged on for many days and depositors who visited their local branches found they couldn't withdraw cash, depositors in Henan and neighboring provinces became increasingly concerned. especially when it was discovered in late April that a major shareholder of the four banks had been arrested under murky circumstances for serious financial crimes. Many Chinese have seen the four's unscrupulous dealings. After a series of bank runs and local demonstrations on May 21, a major protest outside the China Banking and Insurance Regulatory Commission (CBIRC) office in Zhengzhou, Henan's provincial capital, the gathering drew awareness of the depositors' situation despite police intervention. As depositors agitated, many found in June that their mobile phones' pandemic-era public health codes had turned red when they scanned city-specific QR codes at railway and bus stations, hotels, shopping malls, and other locations that required such regulations. Most believed they passed COVID-19 testing, but red health codes indicated otherwise. The aggrieved depositors could not protest the deposit freezes in Zhengzhou by public transit because a red code bars its possessor from most public locations. Beijing intervened after China's fury over municipal officials abusing COVID-19 public health codes for non-pandemic causes. After local authorities stated that a computer fault mislabeled health codes, 5 Zhengzhou officials, including a deputy director in the Political and Legal Committee of the Zhengzhou Municipal Party Committee, were reprimanded. A larger protest outside the People's Bank of China building in Zhengzhou got violent on July 10. A big group of white-shirted thugs assaulted peaceful protesters outside the bank's office, hospitalizing numerous. The demonstration police did nothing to stop the assault. The violence became viral by Monday, and local leaders were severely criticized on social media. Rural bank crisis response. The next day, Henan police declared a breakthrough in the four banks' criminal proceedings. A nearly unlimited moral hazard assumption underpins Chinese banks and the financial system. Since last year, the provincial government has issued 333.1 billion yuan special purpose bonds to recapitalize local banks. Chinese developers sell apartments before completion. Since the property crisis began in September and October 2021, house prices have decreased in more than two-thirds of China's 70 major cities, probably all smaller ones, and new apartment sales have collapsed this year. This further weakened homebuyers' trust, and purchases and pre-construction purchases plummeted. Because pre-sales financed almost half of the developers' financing, the crisis hit severely. Many projects are late, frustrating prepaid homebuyers. Mortgage boycotts worsened things. Since the 2008 financial crisis, this has increased substantially. If homebuyers boycotted mortgage payments on incomplete homes, other mortgages might follow, especially if property prices were decreasing. Authorities help developers revive unfinished projects. China's banking regulator advises banks to lend more. Market experts suggested local SOEs could join banks to buy and finish unfinished projects. 2 state-owned firms will create a real estate fund in Zhengzhou, Henan, the city with the most mortgage boycotts. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, hit that subscribe button before you go. Thanks for watching.